Welcome to ANDIKA. My name's Andy Semple, and today I'm going to talk to you about the concept of trend following. Trend following seeks to capture the majority of a trend, up or down, for profit. Markets go up, down and sideways. They trend, they flow, they surprise. No one can forecast a trend's beginning or end until it becomes a matter of record, just like the weather. Several basic concepts exist to define a trend. The most common ones are as follows. Trend with pattern entry with a weighted moving average, a simple moving average crossover pyramid, and the highest high, highest low 35 channel. The system's premise is that prices above the 50-day moving average indicate a bull trend, and prices below a 50-day moving average indicate a bear trend. Now, have a quick look at the chart here. Notice you'll see the 50-day average. It's contrasted there. Essentially, you're wanting you notice the uptrend when the shares or the underlying assets trading above, and obviously it's in a bear trend when it's trading below. It's a very simple technique, and it can help identify and establish a trend straight away. You can see on the particular chart where we've marked particular points on where you should be buying or selling in this particular example. Another one to look at is pyramid techniques, where they are designed to get you into a market a second time at a later stage following the original entry of the first. Have a look at this particular chart here. This time you'll notice there's three different types of weighted moving averages on the particular chart here. A 25-day, a 50-day and a 75-day. Essentially what this premise says is if the 25 or the close moving average crosses the 50, that's your first point to indicate an entry point. Should the 25 then cross the 75, that's another point where you can add to the position, and vice versa if the trend is obviously to the downside. The idea is that there's a higher probability that the trend exists and it will persist, so take advantage of it and add to your position. Now the last one I'd like to quickly look at here is to do with the bands. Now the higher band indicates the highest high of the past 35 days, and the lower band indicates the lowest low of the past 35 days. Now if you have a look at the chart here, that particular strategy is illustrated there, and notice how the bands sort of just follow to the up and to the down. What you're looking for there is if you're trading to the upside and it's within the top band, you stay with it. But should that trend reverse and then cross down to the lower trend, then it's time to switch and go to a downtrend. Now, technical trading theory postulates that a crossover of these, psychologically important lines is the result of a change in the market's opinion, and thus continuation of the initial movement could possibly be expected. Now, many trend following systems are based around this very, simple concept. And again, a breakout and entry signal occurs when the price crosses over the particular band. When the opposite band is crossed, the position is reversed. You're going to have ups and downs in your trading account. And remember, losses are part of the trading game. You're going to have losses with trading. Now, if you don't have losses, you're not taking risks. And if you don't take risks, you won't win big. Losses aren't the problem. It's how you deal with them. Ignore losses with no plan, and they're going to come back to haunt you. Now, trend following works to help handle losses with stops. This sensible approach allows you to continue to trade. Now, also have some profit and loss exits based on price and time, and make sure you get out if either is reached. If you're trading with derivatives, a very basic premise here is buy call options when the underlying stock is trending up, its sector is trending up, and the market is trending up. Vice versa, buy put options when the underlying stock is trending down, its sector is trending down, and the market is trending down. Know when you're going to get out of the market before you get in, and buy on low volatility and sell on high volatility. Until we meet again, good trading.